Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Wednesday, April 1st, 2026. Stocks pushed higher again, but you could feel a little flinch underneath the rally. The market kept leaning into this Iran de-escalation story, and the big tell was simple. As oil cooled off, energy got wrecked, while big tech and AI exposure carried the tape. On the S&P 500 Heatmap, the board looked mixed to green, but with a very clear hot core. Tech and communication services were the bright spots. Google really stood out. Industrials were broadly green too. And then you had the loud exception, a deep, concentrated red pocket in energy, with Exxon and Chevron heavy to the downside. That heatmap contrast tells you exactly where the money went. Capital rotated back toward growth and AI beta as the geopolitical risk premium eased. Falling crude undercut the whole energy complex while acting like a tailwind for the rest of the market. Industrials joined in too. On the other side, defensives like consumer staples lagged, and there was some pocket weakness in payments and fintech. Zooming out, today really wasn't about rates. It was geopolitics versus positioning. Traders chased upside in tech and comm services while dumping the oil hedge that had been protecting portfolios. Breadth looked constructive, but it didn't feel like a clean all clear. Defense exposure held up even as oil fell, and leadership inside the megacaps wasn't perfectly uniform. Another sign, this was relief and repositioning, not complacency. On the chatter front, there was some speculative oxygen around reported SpaceX IPO filing talk. Headlines like that can lift the mood around high beta growth, even if it's not directly in the big public indexes. But keep the framing tight here. This is narrative fuel, not a confirmed driver of the whole move. Google was one of the clearest green leaders today, up about 3.5%. That mattered, because it gave real index support right when energy was getting dumped. And importantly, there wasn't one clean, confirmed headline tied to the move. This looked like the market paying up for liquid, high-quality growth and a risk on continuation. Exxon, ticker XOM, dropped just over 5%, and it was the session's cleanest tell. The read tied it straight to oil easing, as hopes grew the Iran war could end soon, taking the war premium out of crude and slamming the energy complex. When the index is up and XOM is down this hard, that's the market actively removing a hedge. AMD gained a little over 3%, and that matters because it points to real breadth inside the semiconductor move, beyond just the biggest AI headline names. The read was broad semi-strength as risk appetite came back into AI and hardware exposure. When AMD has torque on a day like this, it's a clean signal traders are willing to take growth risk again. Micron, ticker MU, was the high torque outlier, up almost 9%. On the tape, it showed up as a bright green semi-move, but with no clear, same-day headline confirmed. Even without a clean catalyst, a spike like this can pull attention and flows into the broader semiconductor complex intraday. Tesla, ticker TSLA, rose about 2.5%. It fit perfectly into the high beta growth bid on a risk-on session. The backdrop also included major Musk-adjacent headline flow, especially that reported SpaceX IPO chatter. Bottom line, TSLA strength is a classic proxy for risk appetite when the market leans back into growth. Lockheed Martin, ticker LMT, gained just over 2%. No big company-specific headline popped, but the context mattered. Defense stayed supported in the Iran war backdrop, even as oil moved lower. That's your reminder, the market might be unwinding the energy hedge, but it's not pretending geopolitics is finished. Looking ahead, the dominant near-term catalyst is still geopolitical headlines around the Iran war and this de-escalation narrative. Overnight is the big swing risk into the next open. Then the calendar ramps next week. ISM services on Monday, durable goods on Tuesday, FOMC minutes on Wednesday, then core PCE plus GDP and jobless claims on Thursday, and CPI on Friday, along with University of Michigan sentiment and inflation expectations. No predictions here, just a roadmap for where the next volatility could come from. So that's the shape of the day, a relief bid that kept running, powered by tech and semis, while the energy hedge got unwound hard. Into the next session, the tells are straightforward. Does oil stay cool? And does growth leadership keep absorbing flows? Because if the headlines flip, this tape can reprice fast. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.